generational wealth.
You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good morning, Quasar Markets Live. Welcome back. It's Wednesday, November 19th, and BigBeat is here, which is good because the market is acting like a toddler who skipped its nap time. We had another red day yesterday. That makes 4 straight down sessions for the S&P and the Dow, 5 of the last 6 for the NASDAQ. The VIX is holding above 23. Bitcoin dipped under 90,000 again. When stocks and crypto are sulking at the same time, there's never a healthy sign. Steve, good morning. Before we dive in, how are you feeling about this tape? What's the mood you're seeing out there?
Yeah, it's negative. It's terrible. It's awful. It's people are unhappy.
I don't mean to laugh, but I mean, you know.
I mean, it's you know, look, the malaise has hit. You know what? Look, 2 months ago when I was screaming that the markets were overbought, when I was screaming and banging the table saying, what is wrong with people? Why are we buying these stocks at these levels? Now I'm like, why aren't we buying these stocks at these levels? We're gotten back to normal. Some of this stuff's off. But what have I said? I said very simple. As these earnings come in, and they're beating a little bit, they're not crazy crushing them. But the guidance has been terrible. Target's numbers came in, and they look people are being a little bit more careful about what they're buying. They're not coming in as much. We're still buying online. There's an issue here. You saw with Home Depot, copper prices have come way down. Copper was out of control. Now it's not out of control. I think people are being a little bit more careful about what they're buying, and that's cool. And that's why I'm long Royal Caribbean and I'm long Disney, because I want to take advantage of this holiday punch. We're gonna get it. And I'm okay with that. But there are still some people that are trying to 300x a short on Bitcoin. And guess what? They're getting bought up and the shorts are getting crushed. That means that the path of least resistance is to the upside. So people need to stop getting crazy again and trying to outmask the market, because you're not going to do it. I'm sorry. You're just not. The powers that be have got this thing wrangled up, and they know what they're doing, and they're right on it. And that's why I've done what I've done and lived the way that I've lived for so long, because I know what they're doing, and this is it. If you look at right now Bitcoin, if you look at the and I got a 1 minute chart up. You should have a 1 minute chart up. You can see massive buying, massive selling. That's just, it's a boom and boom. But the rest of it's very little volume. That's manipulation, folks. All right, that's pure and simple manipulation, and they're not going to get. I mean, it's easy. This is easy peasy money. So be ready. I'm long now. I'm happy with this. Yeah.
Okay, so I was going to ask: is this normal consolidation, or are we finally seeing text valuation partly catch up with reality?
100%. You're absolutely right, Howard. That's exactly
Okay.
right. We are.
My second question for you, though, is if retail is scared and institutions are overexposed, who's left to buy these dips then?
How much? $9 trillion in the sidelines, cash. It's a lot of money. There's so much cash out there in the sidelines. It's not even funny. So when I hear, oh, we lost $2 trillion in the stock market today, well, so what? There's 9 on the sidelines, right? You didn't lose anything. The market just lost some valuation because it's a valuation shouldn't have had in the first place because it's not catching up with the numbers. So now we're seeing that, and I'm okay with that. So let's see that in real time. And look, NVIDIA is going to release their numbers. We all know what NVIDIA does usually on the day. It's buy the rumors, sell the news on NVIDIA almost always. And then you got an opportunity. Netflix was another good example of that, right? Netflix sold off. Guess what? Netflix is coming back now. It's at 114 now, right? That was at 110. When the split. So you got 4% return and almost 3.8% return in less than a couple of days. So find the stocks that you like, buy them, and be okay with it right now, right? And I don't mean go out and buy nutball stocks that are just speculation. I think I posted earlier. If you read the book 1929, it's pretty much right on dead target. I mean, we've got a president just like Hoover right now. I think loves tariffs, trying to legislate morality by blowing up Venezuela boats. They went right after prohibition. Hoover wanted to go at. Hoover liked the media. It's just like how do you not? I mean, just pay attention, folks. All I'm saying is pay attention. I think you'd be very happy to understand how this market's going to run. And look, there's going to be some more selling. That's right. Sentiment 4 straight red days. We haven't had that in a long time, right? And that's not normal either on the other side. So 5 days, anything up or down, there's usually a correction. So yeah, you're right.
Steve, I mean, I have on this time. I'm on the other side of you on this one for a couple of things I've got to ask you about. Is obviously market breadth is extremely weak. Mega caps are carrying the load, and then you say there's a lot of cash on the sidelines, but that's not what fund managers are saying. And their cash levels are actually extremely low for hedge funds, private equity.
Oh, for hedge funds, yeah, of course they are.
And private equity and
let's explain
and retail.
Yeah, let's explain that to you. All right, so that's a good point. All right, so I want everybody to sit down, and I want everybody to learning experience for everybody right now to understand what's going on. Right. All right. Cash on the sidelines does not mean that there's money market money, just money market money. All right. When hedge funds tell you that there's low cash, it's because they are also invested, right? What does a hedge fund do? They hedge, right? They have long positions in stocks or equities or futures or whatever, and they have to protect themselves. They have to legally do that because they have rules in place to protect themselves. So what they do is they will borrow against the hedge money on the sidelines. So money market money. So they take that money out. They go, okay, I've got $50 billion in hedge fund money. I'm now going to buy copper futures against my copper position. Now, the money is still there. The cash, the money market money is still there, but the banks take it away because we need to protect ourselves. So the cash is still on the sidelines, but the margin credit is no longer there because the bank says, no, I'm not going to give you as much money. I'm not giving you that margin credit. So all of a sudden, yes, there's not as much because they are now protecting themselves. All right. On the private equity side, we're seeing that very clearly. They are taking their money on the sidelines, asking the bank to give them money. So the bank says, okay, we'll give you money to borrow. They're taking that money away. They still own it. And they're using it for mergers and acquisitions. A good example of that would be Unity Software today. Great move on Epic Games. Great move. mergers and acquisitions. So now, yes, there is less cash on the sidelines, but the amount of money ready to go move back into the markets is very, very high. It's the highest in history. So there is this balance that's happening. And that's what I said 2 weeks ago. Margin money from the banks is starting to pull away, right? You're starting your own money, margin money getting pulled. That means you can't bet as much money in. That's what I mean by the margin side of things from the banks. The banks are setting your problems, right? Because why is that? Because the banks are in trouble. They are in massive, massive, massive trouble. They have a lot of money that are sitting out there with homes that we're seeing foreclosures. So you see what I mean? Where the whole thing kind of comes together with home.
Well, but that's why I have to take the contrarian to yours. This is the time to go long. We're now seeing more private credit cracks we're hearing about. Blue Owl, just breaking news. I don't know if you saw it, just came out. They canceled that merger. So, is that, are we missing still some, and you just said it, you still think there's some selling that could happen, but do we have more cracks?
Yes.
Okay.
Yes. But we've had cracks for a while, and guess what? Nobody cared. This is an emotional market. This is not a market that's based on real life, right? We saw that with AI. We've seen this with now the over nonsense, right? It's getting weirder and weirder and weirder. This is an emotional market, and I'm okay with that. It's the market. It doesn't care about you, doesn't care about me. It's a mechanical machine. It doesn't care about your emotions. I mean, I don't mean you, I mean the people out there. It doesn't care about anybody's emotions. It cares about who's buying and who's selling, because there's always a buyer and a seller. So where are the buyers? The buyers are sitting on the sideline waiting, right? That's why you're not seeing massive sell-off, because there is this kind of cash on the sidelines. Not crazy amounts of cash, but there is equity on the sidelines to waiting to be moved back in. So hedge funds go, ooh, okay, the stock market's going back up. I don't need to hedge anymore. I don't need to protect myself. I'll move it back into cash, bend the cash back into buying the stock. That's what's happening right now. And look, it's not an easy way to see that all the time, right? That's why it was hard to see over the last few weeks what they were doing, because the institutions were confused. They were highly confused. Even they were chasing the AI problems, right? They were going, ooh, okay, maybe I'm missing the AI run. Well, those of us that are in AI know, no, you're not really missing it. It's just that you just weren't paying attention over the last 3 years, right? You've been saying that crypto is dumb over the last 15. Right now we have ETFs, so now we have all this Wall Street loves. Now we have Bloomberg and CNBC loving crypto again. Right? What the hell, right? Get real. Think about what it is that we're investing in. Think about what the market is doing, and that's how we're going to understand the next level of this, right? So when we saw that dip in Bitcoin overnight, it got bought right back up, because that is consolidation. That is capitulation happening in real time. And we're not going to, we tested it 3 times now. No, that's it. 3 or 4 times and we go back up. We're going to hit 100,000 before the end of, I think soon. I think we're going to run. I think it's going to catch these short sellers off guard, their pants down, and we're going to take their money from them. And I'll be happy about that.
Problem is the on-chain doesn't show that. On-chain shows a 4-to-1 loaded trade to the upside. So retail has firmly bought the dip.
Yes,
they're out of cash to buy it anymore. So now they're easy pickings for the institutions. As soon as they see them load in, boom, boom, boom.
But institutions have been wrong. They've been wrong. That's what I'm saying. That's exactly what I've been saying. They've been wrong, and they're the ones playing catch up. The retail has been on the forefront of most of this. Institutions did not sell their NVIDIA. Peter Thiel did not sell until he was wrong. I mean, he made money on it, right? But he did not sell the top. All these companies
he's so close, 120.
120. Yeah, he's 118 to 50, right? So like he didn't hit the top, right? He missed most.
I mean, $3. It went to 121. Yeah. I mean, Steve, only one guy buys the top. Only one person can buy the actual top, and only one person can buy the actual bottom. If I was Peter Thiel, I'd be very happy today. With that move. I wouldn't be as happy with my company PayPal.
and what is Peter Thiel going to buy next, right? That's what I'm saying. That hedged money.
Hopefully his own stock, because PayPal's in the toilet. Hey, we got to get to the macro event of the week. NVIDIA earnings here. This is like Taylor Swift pre-sale, the Super Bowl, and July 4th all at once. The street wants $55 billion in revenue, $1.26 in earnings, and guidance around $62 billion. But the real question is simple. Is this AI spending real, or is it a circular money loop? Startups are raising cash. They pay NVIDIA. They raise more cash. They pay NVIDIA again. Steve, is this a secular trend, or are we flirting with pets.com?
It's a great question. There is a circular motion with the AI money, where here is what I'm going to tell people to look at. All right. Great that NVIDIA is building chipsets. And those here people know I'm a huge fan of NVIDIA, and I understand that the Broadcom, NVIDIA, AVGO for those of you who don't know, NVDA for NVIDIA. I understand how that market is moving. But the problem is still the same. It's still energy, right? So we still need all this energy. What if I told you that 3 Mile Island is being restarted to help Microsoft build their energy infrastructure out?
I would say I already had it ready for you.
Oh, yeah. We have not. I've not had a chance to look at this. Sorry, Howard. Oh, well, we're on the same page.
You jumped four segments ahead.
I apologize. I haven't read anything yet today. But
no problem. I'm just teasing you. But I'm with you. Yeah. I have those questions for you here, because my question is the real AI trade right now the nuclear trade? Is the smarter trade not the chips? Maybe is it the power company feeding the chips?
Well, you took the words out of my mouth. That's exactly right. So I'm going to say it's not the power. It's not the chips themselves, but they need the power. Look, it's great you build all these chips, but if you can't power it, great. If people can't afford them, great. You're going to be sitting on a pile of chips, right? So that's why you've seen the circular motion of buying and selling of the chips and the energy. It's a big rotation, and we need to understand that rotation, right? How many times have I talked about Constellation Energy here, about Con Ed? I've said this a million times. It's going to be cold in the Northeast. Nuclear 3 Mile.
I don't know if this is like, I see more and more things on my Facebook feed about the weather now and TikTok. I don't know, and they're from like real weathermen, but they have you scared to death. I don't know if you've seen this. They're talking like just crazy amounts of snow where I live.
And I said, and look, our AI caught this, right? I know this for a fact. Caught this months ago, right? That we were going to have a massive, massive cold weather. And I said this.
Yeah, this Alberta Clipper. I'm learning more about this Alberta Clipper system than I've ever wanted to know about.
Buy nat gas. And I talked about Con Ed for several times, right? That Con Ed is going to be one of the facilitators of that. And Con Ed's doing the right things. And this is not a normal sexy stock, not NVIDIA. It's Con Ed. But Con Ed could be the sexy stock, considering they're going to be the ones having to power all this Northeast AI. Because if you don't know, that's some of the bigger Watson X is up there in the Northeast that uses Con Ed. There's a lot of things.
Well, you just talked about it yesterday or the day before with the spots where the data centers are getting built. New York, one of the major centers that they're talking about, along with Texas. And as you mentioned, Constellation Energy up about 3.5%. U.S. government is loaning them $1 billion to restart 3 Mile Island. Constellation supplies power to Microsoft and Meta's AI data centers, as we were just saying. Nuclear, as I said, might secretly be the AI trade right now.
Picks and shovels. I mean, it's
getting back to NVIDIA now. Sorry, just so I get back into that segment there that I think I had, although we hit most of everything on there. Well, I mean, Steve, I got to ask you, though, what happens, where do you come in? So that they're expecting about an 8% move in the option market. That moved from about 6.5 yesterday. So it's got massive market impact here. What do you think the market's going to see when we hear Mr. Jensen talk tonight?
Guidance. He's going to sit here and tell us what he's working on and some of the cool things that's happening. Yeah. I mean, I think the problem with Jensen Huang right now is that he's shouldering the whole world right now about what's going to happen, and I'm a little concerned.
That's the gorilla in the room, right? What happens tonight is going to decide what happens for the next at least 7 days. So it's going to be interesting. Steve, let's get a little bit into yesterday's earnings here, and this morning the numbers that are already in. Let's talk Lowe's, a huge beat. Earnings, revenue, online sales up 11%. They even raised guidance. Meanwhile, Home Depot is over here blaming the weather. As I said yesterday, is this Lowe's executing, or does Home Depot have a bigger issue? Are they fumbling the ball?
I don't know. I haven't been to Lowe's and Home Depot in so long, it's not even funny. So I don't really understand their philosophy on both sides. Is Lowe's stealing business from Home Depot? I don't know the answer to that.
The answer is yes. I mean, based on the numbers, you know, especially on the online side, that 11% was a big move for them.
Yeah, maybe,
You know, especially that's where Home Depot kind of dominated, quite honestly. Does Home Depot maybe need a shakeup? Like I mentioned yesterday, they've missed a tremendous amount of, you know, their guidance.
Yeah. Lowe's caters to the same people, right? Home Depot, same. I'm beginning to wonder if some of the and I hate to ask this question, but are some of the raids happening at Home
Absolutely.
Depot?
That's, I mean, hey, listen, you know, we got to take everything into account when you look at this. You know, a lot of people, especially I know when I lived in DC, people would go to Home Depot and grab whatever tools it was that they needed, and along with 3 or 4 different workers to come do the work for them. I mean, I worked in the restaurant business. That was what we did when you were building a new restaurant. So is that affecting it? You know, that is a great question I wonder about there. You know, because that is an interesting one. I don't know. Steve, one that you have hated forever, and my wife loves, but I don't. You can't love the stock's price movement at all. Target with another miss here, although they didn't. They beat earnings. They lowered guidance. Again, traffic is still weak. Stock's down 35% this year. Steve, does this say anything about the lower income consumer?
Yep, 100%. You know, they're having to lower prices, and no one's going to Target. It just is what it is. Target's not keeping up with Walmart, and I've saying it for a while. Target's, I don't know what anybody sees in Target, to be honest with you. I just don't get it. And when I don't see things like that, and Target's been down, it's going down, it's continuing to go down, and it will continue to go down a little bit. I don't see a stoppage in this sell-off yet, unless there's some buyback from the company itself. They're going to have to do something. They're going to have to fire the CEO. That's all there is.
Remember, they just got a new CEO.
I'm
They
sorry.
brought in the guy that supposedly going to go back to
Clean
the old formula.
Yeah, that's right. I'm sorry, you're right. There's
it's not showing up in the numbers yet, I think. And I wonder if they're losing that consumer to Costco and Sam's and Walmart.
They are. Yeah.
Because I noticed, you know, like I said, my wife was a huge, you know, Target consumer, especially with the 5-year-old. And more and more that's moved to Five Below.
Okay,
and to Walmart and Sam's, like you're saying. So I do think that is an interesting one to keep in mind. Steve, the other one that I know I have been all over, as you know, is Plug Power's meltdown, huh? Down another 21% here this morning. They issued a 375 million convertible notes. Major dilution. Is Plug in survival mode at this point?
Yeah, pretty much. I think that the problem with EV now is, I think the companies themselves, let's say like the electric, Plug Power puts in these spots where you can plug your car in, they charge you for it. Look, I don't know, that as a business that never made any sense to me. And why? Because ExxonMobil, all these big companies that they're the ones who are going to just put them in. They have the cash to just go ahead. You know what? I'll just put electric plugins in my gas station, and then be done. Right? I don't need Plug Power. What do I need that for? And you saw Jeep producing a new electric vehicle today. I like it. I think it's cool. Electric vehicles are not going away. There's more and more and more and more of them. So yeah.
I'll play contrarian on that one again, because I will be like Andrew Ross Sorkin was when it came. So where is the EV thing in the middle of the Yosemite when you're out there on your SUV, your Jeep going through the forest?
Let me answer that question. Okay. I will show you what Jeep has done. I think Jeep has done something very cool. The Jeep Recon, the new one that they're talking about now, if you haven't seen it, they have this new machine that goes with you in the Jeep and goes outside, a solar panel, you set it up and all the cool. So no, I think Sorkin's wrong.
I'm reading. I grew up driving a Jeep and Jeeps and big fan, but when they started raising the Wrangler to 80 grand, they lost their entire consumer pretty much to the Bronco. So we'll see how that works. And getting back to Plug, if hydrogen is the answer, why is Plug always on the wrong side of it? Shouldn't they offer, some support here at some point?
At some point. Yeah.
Yeah. Steve, another one there that you and I are not necessarily fans of, but blew me away. DoorDash upgraded price target to 260, moving up on that news. Know what I took away as a bigger thing, and as a restaurant owner, it makes me insane. Their profit margins are 50% while they squeeze out every mom and pop restaurant in the United States.
Yeah, I'm not a fan of DoorDash. I like Uber Eats and a lot better. Yeah, they do. DoorDash is
They prey on the restaurants. It really took hold in COVID, and you can't get away from it. So it's interesting. Steve, one that might not have been on your radar here. How about Wix? Down 12% here after their earnings came out. They beat earnings, but guidance not so good. I guess, folks, this AI replaces the need for Wix, right?
Yeah,
build a website for you in 30 seconds.
These companies that produce websites, I mean, they're gone. They're done. It's over. It's a matter. Just tell me when. I don't know when, but it's over. I can tell an AI to build me a website in 5 minutes. So I mean, not a good one, but that's what Wix does, right? Wix, it's not going to build a Quasar market site, but it's going to build you a normal personal site, and it is what it is.
We do have some more mergers and acquisitions. Nexstar Media Group now down a little bit after agreeing to buy Tegna for $6.2 billion. Any interest in this move there, Steve? Is this just more merger and acquisition between the entertainment industry?
M&A. I mean, I've been saying this a billion times, right? Just expect M&A. If you see a company has cash flow and they're smaller, and then there's a bigger company and a bigger whale, they're going to buy you out. They're going to figure it out.
And then next, Steve, before we get into the open here, which we're 2 minutes away, QFIN down tremendously, about 12% here. Chinese credit risk is spiking. So as Mr. Flanagan's talked about, not much good over there either in their economy. So there are cracks showing there in their ADR today. Let's start to look, Steve. The tick is slightly negative. Qs have been dropping back down towards neutral here, up 17 basis points. But, as I had mentioned on my watch list this morning, this is the same thing we saw yesterday, green before the cash open, and then it quickly dissipated, right? What do you think we see today leading into NVIDIA's earnings?
I see this China credit risk. The amount of money flowing into China stocks is the highest in 3 years, right? This is probably not a good sign. That's probably where some of this cash has gone to that was on the sidelines. You look at the accountability of China, and I just don't see China's accountability happening, right? So, no, there's a lot going on here that I don't quite haven't got my fingers wrapped around my head around it yet. Alibaba would be one good example of that, right? This money moving into China. I think people are making a big mistake by buying Chinese stocks right now.
I don't argue there. I do think that, every day gets us one more day closer to those two leaders getting into an argument in general. So gold back above 4,100 here. I saw our man Peter Thomas came out with some bold predictions for next year, talking about South Korea buying tonnage.
All right, we're about to go open here. We're open now. Look at this. Royal Caribbean up another $3.50 today. I've been saying it, guys. If you're looking for something to play here, I love this holiday move here on the Royal Caribbean. I'm just went positive on Royal Caribbean.
Nice. There you go.
Disney.
Yeah, nice move to the upside here. Little bit of getting sold off here. Tick is down to the downside off the start here. Like I said, Q's back, although
Tesla at
bouncing back up a little bit. SPY down about 10 basis points. Dow Jones opens up slightly higher, 4 or 5 basis points to the north. Same with the ROT. VIX down about 3.5% here, but still very elevated at 23.82. Gold, as I was saying, above 4,100. Mr. Thomas calling for 5,000 on gold next year, based upon all the tonnage coming in.
I agree with him. Yes, we're going to 5,000, if not higher.
Silver at 51.57, continuing to move to the upside. Copper CPER at 31.08, moving. Still not really breaking to the upside. Bitcoin back above 91K, but holding on very slightly here, still under pressure. Ethereum trying to hold above 3,000 here, but not doing so great. NVIDIA up 1.56% or 1.5% now, headed into their earnings this evening. We also see a nice move up by Google here, up 1.9%, moving to the upside here this morning. Tesla up about 93 basis points. The rest of the Mag 7 down. Meta, the main loser, down about 1%. Wow, Steve. Meta down to 591 now, continuing to slide to the downside here.
Yeah, I think Josh Brown went pretty heavy on the short on Meta there on CNBC yesterday. I don't agree with it because I think Meta is doing quite well. I mean, everybody's on Instagram and WhatsApp, so I don't really know what's going on there.
10-year back down below 4.1 at 4.098. So we do see that moving back to the downside slightly. As I mentioned, we'll have Mr. Flanagan in soon. DXY, nice move to the upside here today, trying to challenge that 200-day moving average and back towards the 100 level. So nicely regained 4 straight green days there, erasing the losses we saw last week. Tick is still slightly negative. Advanced decline almost completely neutral, right at negative 50, right at 4. You don't usually see it that neutral. And same thing across most of the indices. The Dow Jones now down about 6 basis points, while the SPY and the Qs are still up about 10 basis points both, and looking to get a little bit of a bounce here. Early morning movers. A lot of the metal companies, mining companies were getting some strength today. TMC up 5.9%. Albemarle ALB up 2.4%. LITE, which is Aluminum Holdings, up about 3.5%. We talked about Constellation Energy getting $1 billion from the U.S. government to reopen 3 Mile Island, up about 2.94% on it today. Some of the Bitcoin data center companies are up also. Iron up about 2.11% here this morning. And on the downside, Plug is coming off of those lows of the day, now only down 17%. As I mentioned, QFIN down about 14% here. Wix down about 14%. So they are still losing steam. EOS Energy down about 7.42% here this morning. Target is bouncing back now, actually in the green here. So interesting there.
Unity Software now up almost 7%. Yeah, and now up 7% here. App Loving is up 3% here, APP, and Google up another 3% here. So I mean, some of these AI stocks are really starting to push now a little bit.
Absolutely. Looking at the sectors of the S&P, the only things down are real estate down slightly here. Energy down about 2%. Most energy is down outside of Constellation Energy. And then consumer staples down slightly. Biggest gainer looks like the material sector up about 0.5 percentage point today is the leader so far. Tick has gone positive, and now we do see a little bit of a move to the upside here across the major indices. So nice to see that move.
NVIDIA up 1.7% here.
Google's definitely the one running out.
Yeah.
Netflix getting hit pretty hard here.
McDonald's got the upgrade, you know, and it's not pushing. I don't think that people listen to the analysts anymore. I think analysts are becoming a thing of the past.
I don't know. Yeah, I mean, they don't get it right very often.
No, they
Let's
don't.
face
They're
it.
wrong. I mean,
Well,
yeah.
it's a flawed system because if they don't talk good about the company, then the company doesn't give them access to them and information. So it's a tough one. It's like lobbyists and tick's gone slightly negative. Q's though up 40 basis points here, trying to move to the upside. The key is going to be we got to break above 600 here today. 600 is the line in the sand to me. Anything below that keeps us a little bit bearish, but if we can get above it, I do think we could start to see a solid move into the day. NVIDIA up 2%, so people are buying going into the earnings so far. Google now up 4%, really moving to the upside here. Tesla up slightly.
Google's up 4% now.
Applied Digital up 4.71% here. Nice move to the upside. Lowe's up 4.65, holding up pretty well, quite honestly, trying to move back to highs of the day. So people loving Lowe's so far. As I said, a lot of the mining companies are moving up today. TMC up nicely. Freeman McMoran up nicely. On the energy side, Constellation Energy up. Lamb Research, I talked about that yesterday, right, Steve? Off the 50-day MA, up 3.5% here today. If you were listening yesterday, that was one I liked off of yesterday's, one of the laggards yesterday. Let's see what we do have for laggards so far today. Plug down 16.82. Same thing with Wix. QFIN pretty close to the same thing. A lot of the Chinese names getting hit here also today.
Yeah. I don't. China's names, that's just silly. People buying China stocks is just stupid.
MSTR down about 3.26, giving back any of the gains it had yesterday. Diamondback Energy down 2.75%. Devon Energy. A lot of the energy names down today, not named, like I said, Constellation
I do like
Energy.
Devon Energy. Devon is one of my faves, by the way, for those of you who don't know. Tick just got spanked there. U.S.
Definitely a little bit of selling still. Definitely a little
U.S.
bit.
Energy Secretary Wright says Constellation plant will be back online in 2027. Ouch. Disney back to 107.
Nice. Not seeing a ton of NVIDIA pulling back here from that 185. Apple's gone positive of the day. Google's the runner, 4% to the upside. New all-time high there, 297.65. Market cap at over 3.5 trillion now. So Google definitely moving up. Not on any real news that I saw.
Ellen Barkin now says she agrees with Powell. This is a rate cut that's not a foregone conclusion. That's what Barkin just said that. Ellen Barkin. I think that's why you're seeing this little bit of a pot to downside. But I she's wrong. I mean, that's just be wrong. She's wrong.
I will say, and again, I know you hate it as a indicator, but FedWatch went negative on that again. So it's less than 50% chance.
Whatever.
Just pointed it out.
It was great a 3 years ago when people did not really understand it. Now everybody's watching it, and it's like, it's not. It's lost its ability to understand the Fed. So I don't touch it anymore. And that's what I mean by you got to be able to move with the market and understand where the market really is and who's watching what. And so, yeah, Yeah, the tick just went. I mean, well, wow, the tick really went negative off my screen there. Tick went down 357. Yeah.
Tick still down about 200. Advanced decline is now down 200, so we are sliding. Mag 7 though going to the upside in general. Nvidia up 2, Google up 4.5.
I think we push higher today. I just do. I think that once this nonsense of the first half hour is done, I think we push higher.
I think it's going to be an interesting one. I think it's going to be a very much wait and see day for retail, for everybody, and that's just because of Nvidia. So I do think we're going to see a lot of lower volume here today until we get closer to the end of the day. You'll see a lot of speculation. That's what you'll see today. Nice move up by ASTS. Space Mobile up about 3.59% here. Nice move back to the upside. Banks getting a little bit of love today. JP Morgan up 1.3%. Bank of America up 1%. This is after a multi-day slide, though, on all of them. They've been down basically 5 or 6 straight days.
Wix is now down 15% here.
Oh, yeah. AMD still moving to the downside here. Same thing with Texas Instruments. The rest of the chip sector moving to the upside, being led by ON Semiconductor, up about 3.07%. Oh, Lam Research actually up 3.93. Missed that one. We talked about that one here on the show yesterday.
Yeah, I mean, WTI now 58.84 now a barrel. I mean, it's firmly below the 59 handle now. Wow.
Hey, I will tell you, Steve, Costco's taken a big dump the last 5 days, right at the bottom of linear regression, now at 885. I am definitely looking at Costco here for a little bit of a recovery. 870 would be about the spot.
91,600 now back on Bitcoin there. If we can firmly stay over the 92,000 handle there, I think we might be looking pretty good.
Got to get above 93.5 and hold.
93.5. Okay, I'll go along with that.
That's the first fib level that matters.
All right.
Got to get back into the daily linear regression, which is right at that level. Because yesterday's high, we got, you got to watch it. That was yesterday's high, was 93.8 or so.
Yeah, I'm positive on all this. Q's just hit 600 again. I'm positive again. I think a lot of the capitulations happened. The selling has happened. So I'm okay with this. We need to get Steve Flanagan in here and talk about the Tuesday deal he talked about last week. $91.7 now on Bitcoin. I like this run here.
Yeah, we still need to see, like I said, spot buying. I like the setup in general, but it could be a consolidation for a little bit. Could be a consolidation, for a little bit. As you've said across a lot of the stocks I asked you about, is give it more time. Give it more time. It needs a little bit.
Yeah, there she goes. 91.8 now. You get about got above a 92 here.
Key spot on the upside is right there, right at 92 for the first thing, and then 92.7. Google still moving to the upside, 5.27.
Yeah, there's a big move here. 91.8 now on Bitcoin.
Google 300 now. Google just hit 300 for the first time. Nice move to the upside. Congratulations to Google.
Question is, when does Warren Buffett and his team take profit?
Yeah, absolutely. I mean, it's up probably 10% since they announced that.
Yep.
271. Yeah, exactly. Almost exactly 10%. He won't. Well, I don't want to say that, but I do think. Now up almost 5.4%. And we know it's hysterical. So Google's up 5%. Berkshire Hathaway just bought Google, right? You're just talking about it. It's down 1% today. Now, I know Berkshire does a lot more, but that just kind of shows you the market, the sort of weirdness in the market, right?
Nvidia's up 2.3% here.
Yeah, still moving to the upside. Q's nicely up 63, 64 basis points here. So the algo's like what the news they were seeing overnight.
Ticks up 300. Yeah, agreed.
Like you said, you expecting to see this. So that's a good move.
I like
Nice
this
move to
Disney.
the upside.
Disney's also now up $1 here. Well, 1.14 now. Might
video. Let's bring us out of the darkness.
All right, I see our boy. Let's get him in here.
You got it. How we doing today, Mr. Flanagan?
Morning, gents. How are we? It's looking like the capitulation is over.
Oh, it's over. Okay, completely over, you think?
Well, look, a number of things going on. Let's start off with it's a broad risk off. Started in the U.S. It's now spread everywhere in the world. You're seeing this happen, and you're seeing a lot of cracks. China's 10-year bond yield exceeded for the first time a Japanese 10-year bond yield.
Yeah, did.
Everybody's scared that now it's obvious. We've been talking about it for months that China is slipping into deflation. But it gets worse because the Japanese 30-year bond hit an all-time record high of about 3.3%. That's a historic high. Now, Japan has interest rates at 0.5%. So what is the world beginning to show us? It's showing fiscal strain, budget deficits. Okay,
Yep.
we've talked about that. But more importantly, it's showing liquidity strains. Now, we have the Fed's minutes today, and everybody's saying, now we're going to see how divided the Fed was, Wake up, Fed.
Divided. Yes,
But
wake up, Fed.
Got to wake up.
Wake
the
up, Fed.
world is showing all the strains that is necessary.
All the strains that they said that they needed to see in order for them to cut rates.
And they keep talking inflation. Where is inflation? Inflation down in Europe today.
Yeah.
Down in the UK.
Job losses are, and the Fed has just now cut Steve Flanagan off.
I thought he got a new computer. What's he doing there?
You cut his screen off.
Although that's weirder because it didn't. Yeah, I don't know what happened.
Look, he's right. I mean, he's right. They are not paying attention, or they are lying to us. Point blank. Right? He is saying,
I can't.
Because they're saying, okay, well, it's jobs. Okay, well, jobs, or inflation. We have a two-part mandate. Okay, you watch. They're going to change the goalpost again, right? Oh, Barton goes, well, I don't know. We don't know about this rate cut. I don't know. It's dependent, and we don't know. If you don't know, why the are you a goddamn Federal Reserve member, board governor? If you don't know, then you don't know. You don't need to be there. I don't know how else to explain to people there. This is the third governor said, I don't know. I'm lost. I don't know what to do. Well, guess what? Resign. I don't know how else to tell people that. I don't get it. I mean, this is exactly what's wrong with America right now. If you don't know, tell them what you don't know. That's fine. Steve, I mean, there you're back up. Steve, I just said the same thing. Barkin just said she doesn't know. Okay, great. Guess what? She should resign. If you're a Federal Reserve member, you don't understand the markets, maybe it's time to leave.
I don't know what data that they're looking at. It's got to be a little crystal ball or something, because
I'll give them mine.
Yeah, Steve, why not? Right? I heard you say take Quasar Markets, give it to you for free. But you know what? I think that what everybody has to understand is that with risk comes rewards. The whole thing started off on some narrative that the AI industry taking all this debt, floating all these bonds. How else are you going to see the AI future unless they invest now? And what they are doing is investing now. Okay, the market wants a little bit higher rate on corporate bonds. Okay, I can get that. But yet again, what is that telling us? It's telling us of liquidity strains.
Right.
When I hear the Fed talk like this, Steve, I'm like, okay, I never became a PhD in economics, and I never taught in big universities, but damn, I can see a problem of liquidity right in front of my own eyes. How come you can't? So I think what you're seeing, a broad risk off, and hence everybody's suddenly going, where do I go? Can't go to Japan just yet. Can't go to China right now. Can't go to Europe right now. UK, they got a budget coming out. And suddenly it's dollar by de facto here. You have dollar yen just hit 156 and change. I mean, look how fast that move was. Last week it closed at 154.52. So the dollar is beginning to do just what I've been talking about. Suddenly there's no way to go. You got to get into the dollar here.
And this is a quick question here. Conspiracy, is it all about sabotage this administration? I've said this a lot. I think this is the most political Fed we've ever seen.
Absolutely, Steve. And they've put themselves there.
Yeah.
I think today when you see the minutes come out, I think your point is going to be in stark contrast that the Trump guy who came in wants 0.5%, and the others are upset that he keeps talking bad about Powell. So no way, we're not giving. What about the people? Hello.
Hi. Yes, exactly. The ones that are having trouble with housing, the ones that are having trouble getting cars, the ones that we already seeing foreclosures at the highest level since 2008. We've got a problem. You're seeing it right now. Home Depot is having issues, right? You're seeing lumber prices, I mean, just cratered over the last 3 months. That's telling you what's going on. Job losses are AI, everything, and you don't know.
Yeah, exactly.
How do you as a Fed governor say I don't know?
You know, I heard you guys mention it, and I actually went in and looked commercial real estate, and the default ratio is back at 2008. Now, if that doesn't shudder the Fed, and if they're going to broadly say, if Barkin is going to come out and make that comment, what the heck are you?
And there's no money this time, and Trump is not going to be releasing the spigot again. He won't do it.
Nope.
So now we're in a real trouble.
Iceberg dead ahead, Captain. And I think that cooler heads will prevail. I think they're getting their little political whatever out of the way and saying, no, it's not a sure thing that we're going to cut. But I think by the end of the week, I think into next week, you're going to start seeing that whole shift happening.
So I have been reading 1929.
1929. Oh, okay. Boy.
All right. So Calvin Coolidge was president. Now listen, I'm a historian. Somebody knows that I have a master's degree in all this, so I get it. So, and undergrad was poli-sci, and so for those of you who don't know, I'm a presidential historian. So I talk about it from a perspective of academics, which I know you don't like to see sometimes. But Calvin Coolidge was president, and he was pretty much a do-nothing president. He literally read the newspapers every day. He didn't do much. He loved the markets the way that they were. He was hands off of Wall Street. We didn't see that with Lena Khan and with Biden. It was very hands-on, very stopping every damn thing they tried to do. And now we got a president who loves Wall Street, but very hands-on when it comes to this. But the thing that Hoover did was tariffs. And the thing that Hoover did was he was the morality issue with him with continued prohibition, all of those things. Right, we're seeing 1929 play out right here, right in front of us. Now, I know that it won't be 1929 because of the things. And Trump made a very strong comment. He does not want to be the next Herbert Hoover.
Right.
Mr. President, then you better change course quickly, right? You better slow down the tariffs. You better slow down the thought process here, because you're literally playing right into it. So, Steve, the question mark I have to ask, right? Is this what the Fed is worried about? That we're slowly, because Greenspan many times said, he was a historian of both the Great Depression. He was a historian of almost every time that we've had sell-offs in the market. So he understood that. Are we going back into this? Is there a massive problem? Are we worried about a recession? I mean, we're in a recession. I think we're in a recession now, right? But are we in a depression? Are we getting closer to depression?
So let's unpack that a little bit, Steve. The main point is all of these people, Greenspan, Bernanke, they were all great historians. Romer, who was in 2008, was on the President's Economic Council. And even Larry Summers. Ooh, that may be a word we don't say often anymore, but all of them
again. Yeah. He's done. Yeah, he's done.
Yeah, all of them were historians. And what they looked at in 2008 the relationship in 1929. And what they realized was that the Fed and that the government, they never followed through on the fiscal stimulus side. And that was the main key that they drove. Hence, all the bailouts and everything. They just flooded the market and continued for the next 2008 to 2022 to flood the world with money. Now, the hangover is that we're all suddenly waking up with tremendous amounts of debt that have been floated. And that is the problem, Steve. I like the correlation to 1929, but you don't have in 1929 companies going, I'm going to send $50 billion on a data center. You don't have Saudi Arabia coming in saying, here's another trillion.
Well, no, in 1929, when the markets did crash, they did have many people like Morgan Stanley and those guys, at that time, actually, the guys, Charles Dow himself, they were walking around the floor of the New York Stock Exchange handing out checks and buying stock daily, and they didn't help the market either, right? That people just became an emotional market. Are we really seeing just an emotional market?
I'll go back a month and a half ago when we had a Friday sell-off, a 2-day sell-off that was probably 7%. We're in the same situation. The markets correct themselves instantaneous.
Right.
We've had a straight sell-off. I don't know how it's going to continue. NVIDIA comes out with, strong earnings tonight, and then they have a very strong forecast for the future. Tomorrow's a different day. And I think we have numbers coming out tomorrow, employment numbers. So
we do.
I think you're going to be right back on. By the end of tomorrow, you're going to be back on in a rate cut environment. You're going to be on got to be in tech, because if NVIDIA is making this big of a forecast looking forward, then what am I doing here selling? Why am I not buying?
I'm buying. I mean, I have been buying because of the emotional side of things. I'm not buying because I think the economy is great. I'm buying because of the emotional side of things.
The psychology of the market, right, Steve? That's what you're pointing to.
Right.
And emotions are the worst thing to be trading on.
And it sucks. I'm aware, but you know what? It makes money right now, and I understand that. And I hate trading. Everybody here knows I don't believe in emotional trading, but I will. I'm trading on the emotions of other people, I should say.
That's
Sorry.
right. Exactly.
Yeah. That's why let's use the word psychology instead of emotion. Psychology of the market.
But I don't think there's psychology involved in this. I think it's just people's emotions are getting excited or they're lost or whatever. Okay, I'll go along with it. So what is it you want to hear from Jensen Wong today and tomorrow that will make you feel better about everything, Steve?
I want to hear the picture of the future. I want to hear him say we're continuing to see, incredible amounts of demand for our product, and for the foreseeable future, well into 2026. We're going to be working OT to keep up with it. I want to see a positive, forward-looking picture from the man who is in the front row seat.
What do you want to hear Powell say?
I'm not sure that Powell can say anything at this time. I heard somebody talking the other day that if Powell has any concern about his, afterwards, what people say about him, then he's going to have to exit the next, couple of months.
Right.
And he's going to have to start to get in line. And what I mean, get in line with growth and get in line with growth-oriented policies.
So you think he's concerned about his legacy right now?
I don't think he's thought of. I think he's, been a very stubborn Fed that has looked into the wind blowing straight in his face. And I have a view. I'm sorry. We need to be restrictive. Yeah. Inflation is gone. Stop with this inflation chatter. Oil is under $60.
Mira Nista, he said he was have supported to immediately end Fed's quantitative easing at the last policy meeting.
When you take away quantitative tightening, which was the worst, never been tried before, the worst thing in the world, because it extinguishes money. It doesn't do anything other than it takes money away and it's gone. Now that they're not doing that and they're freezing the balance sheet, when the balance sheet drops, they have to buy securities. Look, you can call it whatever you want, but that's quantitative easing again.
Yeah.
You're creating wealth again, or liquidity.
Is it real wealth, though?
It's liquidity.
Okay. Because we are losing, and you're right, see, we're losing liquidity on a daily basis.
Yes.
It's bad. It's really bad that how much liquidity we're actually losing. In fact, Howard and I talked about this morning, right? That I said, look, there's so much, I'm still calling it cash on the sidelines, but the hedge funds are dipping into those liquidity funds and they're sucking that funds up. And the banks are going, okay, well, we're going to take that away from you. I explained liquidity this morning about why cash side. The banks are in trouble. Is that what the Fed's worried about?
I think the banks, they have $3 trillion sitting in the Fed and, to cover themselves. I don't think there's a bank problem at the top, at least the larger ones. So I don't draw that scenario. But what I do think is that the Fed, just as you said, Steve, the liquidity strains are everywhere. So here's the point. Does the Fed sit there and, as you say, get very political and say, we don't like you talking about our boss like that. We're not cutting. And wait for the debacle to happen? Or does the Fed say, all right, we made our point. We all got our little snippets in, but we better recognize what's going on here.
Right. And
there are financial liquidity strains everywhere. And if you ignore them, then you know what? Fire them all. I mean, get rid of them all because they're all.
I think you're right, and I think look, it's President Trump. Every time he makes name somebody and he says something bad about them, you just got to roll your eyes. And I mean, yesterday is ABC News. He called him, he's going to pull their FCC license and called one reporter a piggy. Like, stop! He's got to stop the name calling. Right? Get back to basics and run the country. And if the Fed is really putting themselves around Powell because they don't like the way that he's treated Powell, then I mean, Powell should call it a badge of honor. The president is calling me a bad name. I hope he calls me a bad name, right? And I'll know I'm doing the right thing. But the question mark around it is that do they just say, okay, we understand the liquidity issue, we understand QE and Q tightening, and we understand all this, but we need to get back to what's best for the American people. And they're not looking. They say they're looking at data, Steve. There's no data until this week, and it's going to be wacky. They say that what the rates are worried about with job losses, and they're worried about this. The third thing, obviously, with them is and I hate to even say this, but they're concerned about the next level of themselves, meaning that Mary Cook, you saw all those people that are in trouble with the Fed, what outside issues, right? Barkin, obviously, and of course, with stock trading, that there's a lot of issues. The Fed has a lot. For me, the Fed has a credibility issue. I think that's the question mark I'm asking. Is it protected right now, or is it something that the president's going to try to fix?
They have a major credibility issue. And if they punt on the next rate cut, we're not asking 0.5%.
Right. Here it is.
Yeah, we're asking for 0.25% rate cut. And
right.
I mean, do you really think that that's going to ignite inflation? I mean, it's ridiculous. So they have such a critical credibility right now. If they pass and don't touch rates, honestly, every one of them should be fired. I'm sorry, because to me, they are now being very delinquent in their responsibility to the American people.
Yeah.
And if they want to pay petty politics because of name calling, I do agree. Trump should probably back off of that. I mean, I've never really liked it.
Right.
But you have a job to do. Do your job.
Do your job.
Support the economic growth.
Right. And you've got a Congress right now that's fighting over Epstein files. Seriously.
Yeah.
You've got a Congress, and I think a lot of the Fed here, if they are going political and they're trying to side with the Democrats in a lot of ways, okay, I can understand, because the Democrats wiped the Republicans off the map in the last election, and the new numbers now coming out that looks like the Democrats are going to take both the House and Senate back in a landslide. I mean, that's not unusual. It's normal when a president of another party takes over. There's a flip back to the other side. People like that. You think maybe there's a lot of politics being played here on both sides?
Oh yeah. Oh, I mean, that's the name of the game. Absolutely.
Right.
But
and more than normal, right? I mean, politics in the Fed should not even be part of the Fed, right?
Any part of it. The only difference is that one man with the bully pulpit is making a case to the American people that, look, I'm doing the best I can. Mm-hmm. And, it is showing. You got oil prices dropping again. That's a massive stimulus to the economy, when oil is down at these levels. And it probably keeps going here. I mean, where's world growth? I mean, what it did, Eurozone GDP for the third quarter was minus 0.4.
Right.
Even that was Japan. Japan minus 0.4.
Yeah.
The Eurozone was plus 0.2. So right. Where is the growth that's going to spike oil prices back up? It's non-existent.
There's a glut of oil too on the markets too as well, right?
Again, what is the Fed watching here? They're seeing economic growth. So either you can sit there and be blind and just let us walk into your 1929 scenario, which I don't think is going to happen. I would be worried at 2029, though, as debt levels now have to be dealt with, and the 100-year anniversary. But I can't see the Fed sitting and watching here. I think they're going to have to start acting.
Growth is the best thing to get us out of the debt problem.
Steve, it's all about growth. If you can't cut your budget deficits, look at England's having a problem, France is having a problem, and so is the U.S.
Hey, the United States, for the first time under my administration, under Clinton administration, right? We didn't have a debt. We paid the bills. Why? Because of .com, right? Yep. So we should have this. We have an amazing opportunity here with AI to maybe build some things and do some cool things and fix the world a little bit and pay some of the debt off.
But you need everybody to cooperate.
That ain't happening.
You need the Fed to be involved.
Right.
You need Congress. What do you guys? I mean, come on. Epstein committed suicide. I don't care if it was a conspiracy or not. The guy's gone.
Right.
Stop. What amazes me is that all the people that were involved in that and not having it be released were out there standing and taking prestigious jobs and everything, knowing full well what's the skeleton is in the closet. Hypocrisy at the highest level.
I can't believe I'm actually agreeing with MTG.
I know. I'm not having to play referee today, guys. This is no fun.
Yeah. Well, no, I mean, Steve and I have agreed on so many things with so many years. I mean, we're both in the same world. But when MTG herself comes out and says, I'm standing up for women, you've got a Congress that was totally against Epstein files, and now all of a sudden they're for him. Something is not, it stinks, right? And the whole thing is they're not getting done. The American people, they have a lot of things they need to get done here, and they're not getting done. This morning, Carolyn Levitt called on Congress to ban the nuclear rule, blow up the Senate and the House so that 60% isn't needed for this stuff, so we can get things done. We know how bad that happened to the Democrat Party, it ruined the Democrat Party. So I don't know if that's a good idea. But we got to get this Congress moving. We got to get everything moving, or we're in trouble. I mean, we are in serious trouble here.
Maybe that's the answer here. I don't know. From you have a great history on that. Maybe that is the best way. Look, I want my policies done. That's what you guys elected me on. Stop standing in my way. Maybe they do that, and let's just see what happens. Let's at least try to do something instead of sitting back quibbling over, and then next thing you know, hey, I got you. Wasn't your name on an Epstein list? And what has that got to do with the American people and getting us into a better way of living?
I don't want a pedophile for a president. So let's get real serious here.
Oh yeah. Okay.
All right. And if he did do that, then he needs to be hogtied out of the White House, backwards and pulled right out. Yeah, and sucked out like
absolutely.
Stage
but
right.
Let's see. We got some big things. We got Nvidia tonight, and we got unemployment tomorrow. I think by our talk on Friday morning, I think we're going to be in a much better place. That would be my opinion. And that's the way I've kind of positioned my own self.
And I'm staying long myself, Steve. Are you staying long?
Yes, I am. I made some cuts, no question about it. Some deep in the hole that I wish I didn't. But, an emotional market will cause you to make some irrational decisions at times. And 43 years of institutional trading, hey, I still do them all the time. So,
of course, I make them every day. Yeah.
Right. Yeah. But I just see it as the investment into AI and all the bonds being floated out there. I think everybody jumped on the bandwagon. They created the narrative. I mean, all the institutions have been talking the markets down, so they are sitting with smiles on their face right now. But you have to have investment to see the AI future come to fruition. Right. So I'm okay. I'm still very positive on the markets.
Yeah, it reminds me of .com. I mean, like a lot of these guys that didn't understand what the .com was going to do, right? All they saw was all these little websites. What is the internet? What's the internet going to do for me? Today we can't even live without the internet. And in 5 years from now, we won't be able to live without AI in our lives, right?
That's right. I just got my new Dell computer, and I'm talking to it. Hey, what about this? What's going on? What's the weather today? And I mean, okay, I never did that. I looked at the weather channel. So yeah, it does affect everybody's life, and it will affect.
Is it affecting your trading?
Yes, Steve. Actually, absolutely. I'm a big fan of Grok. I love its simplicity and the way it answers. And I would say almost before every trade, a lot of times I go in and just say, what's the latest on this company?
Right. Steve Flanagan is not paid for by Elon Musk when he said that.
No, I use them all. OpenAI, I use them all. I just, kind of have found I like a simple answer. I don't like it when it pontificates to me a little bit. You know, I'm like, look, I didn't ask you that. Jack. Just give me the damn answer.
You ready, hun?
Yep.
All right. Well, it's 10:15. I think we've solved the world's problems right now and beat up on the Fed a little too much. We all love the people that work at the Fed. It's not that. It's just maybe the decisions they're making. Steve Flanagan, thanks. Howard, take us out, my man.
Okay, everybody. The market has been skyrocketing as the Steves have both gone positive here. And we now see the Q's up 1.57%, SPY up over 1%, Dow Jones is up 40 basis points, Bitcoin back above 92. Like Steve said, let's watch for a run to 93.5. Mr. Flanagan, where are we looking for the DXY to go over the next couple of days?
Well, we've got the high of 136. I think that's the next retest point. We break that, and then I think I see my 102, 103 zone.
There you go, everybody. We will see you. That would not be such great for crypto, but thank you, Steve.
Great for
ruining
Japanese
my
yen.
afternoon. Everybody have a great day from Quasar Markets. We'll see you early tomorrow.